Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday. It's October the 5th, 2012. As we do each Friday, I'm going to be going over all the major markets that we track at PerfectStockAlert.com, 19 of them, so that you guys know everything that I know moving into the week ahead. Again, these charts are all kept on our free website at PerfectStockAlert.com and updated every single night, so that you guys know whatever you need to know about any particular chart, any particular night that you want to know, whether I've advanced my stop loss limit, whether I see an entry opportunity, so forth and so on. I don't always cover them throughout the week in a video, but on Friday I will go over all of them. Okay, so let's get started. Looking at Australia's market, the AORD to begin with. A big move here, making lots of money on this trade. We've simply advanced the stop 1 cent below today's low. That's where we've advanced it from, and that this is not a trade that you should just consider as a normal trade. We are looking at a situation that's coming off of a cup with handle chart pattern, and if you watch the video that's on our homepage at PerfectStockAlert.com, it teaches you the order of operations and the importance of certain things in your trade, and this is one of those details that you really want to make sure that you pay attention to and you respect as a trader. Again, this one being a cup with handle, we've seen a lot of these form over the past few weeks. With a cup and handle formation, you can simply take the resistance point there down to the low point of the actual bowl or the cup formation there. Do the math and then simply add that to the breakout point, and that tells you about how high you expect price to go before you get to a point of a pivot point. Basically, either they're going to have to break through some resistance, or they're going to start to find resistance, or so forth and so on. So we're coming close to that. Given our day to the upside, I'll advance the stop again, and then I'd start looking to see what happens next. It doesn't have to. Again, the targets are just something that you say this is where we expect to go. It's not a set in stone situation. You don't bet on it like that, but it just gives you an idea. Okay, so very bullish trade here. Lots of money on the table. Keep advancing your stop. The Dow Jones Industrial Average, a nice trade here. We got a small gain on the table here. We talked about this before when she was pulling back. The pullback here was really important. When you get a shallow pullback like this, you don't expect a lot on the actual gain side, because you can get a really good pullback. You can have breakouts, and then things can develop further, so we're simply advancing the stop. For those of you who are simply trading the first exit target, that would simply be the previous high test. Once you get that, you exit, so you would probably be out already. Those of you who are staying with it, your stop should be set off of today's low, and just keep advancing that stop until we get a breakout. The French CAC 40 index, this one is moving to the upside. We do have a breakout of the downtrend line here, closing above that. You notice this little downtrend line drawn here. We have closed above that, and you'll notice we're basically at the 50-day moving average. This one I'm not trading to the upside. Somebody they could say, okay, I'm going to buy because we've broken out here, and I keep my stop right here. If you do that, I understand why you're doing that. This one, for me, I've just not really been impressed with the overall chart pattern. There's a concern here as well. We'll get to this later, but if you do not take out this high point here, we may have a problem developing on the bigger picture here. Could actually be topping. So it's really important to see these markets break out, because if they don't, you're going to have a formation known as a head and shoulders pattern. When you have the first shoulder, the head formation, and then if you come up here and fail roughly this area here, then start to move over and roll over, you'll be forming a head and shoulders pattern, which basically means we'll be watching this low point and this low point, and the trend line that we draw between those points will be known as the neckline. Closing below that, an actual candlestick that closes below that, would then tell us to take the distance between the high point of the head down to the neckline and subtract that from the breakout point. It gives us how low we expect price to go. It's a big move to the downside there, so I don't want to just ignore this. If we get up here and we don't break out, there could be a problem developing. The Milan index is a little bit different, a little bit stronger chart here. This is something that is, I actually have missed it in hindsight. I wish I had done otherwise, but you can still be a buyer here, and if you were looking to the Europe markets and you were looking for something to be a buyer of, this would be something I'd be looking at in the Milan index there. You had this pullback here, and then we didn't get a hammer formation, which is why I missed it, and then the following day we did move back up here, so I could have blended it and said, okay, there's a hammer candlestick formation here. What I missed actually wasn't this. It was the fact that you had the 50-day and the 200-day real tight right there. That was going to provide a great deal of support, and I overlooked that detail, and then we started moving higher here. So again, you could be a buyer here with a stop set off at this point here, looking for a test of the high. I don't see a head and shoulders formation here, and that's another reason to discount what I just showed you on the potential head and shoulders for France's markets. You're not seeing them uniformly develop on many markets. You're seeing them in a couple of markets, and we'll point them out as I get to them. But it's more threatening when you see them showing up all over the place. For those of you that are involved in the Milan market, we're looking for a test of the previous high. The German DAX composite, this one I stayed out of, didn't really see a good quality pullback. We got a real shallow pullback here, no real strong hammer formation here. We did get a little bit of a blending formation you could have used. And again, we are extended from the 50-day moving average. I just didn't see any real big reason to jump in there and take the risk here, so I just let this one slip past me. We are pulling up here now to the previous high, and it's going to be a situation where you're either going to turn around, fail at this previous high, and reverse lower, and then we'll find support theoretically at the 50-day moving average, and then of course I'd be more interested at that point. We could do a lot of different things here. I don't actually want to be involved here. If you are bullish, this is the trend line you want to be watching right there. If you close below that trend line, you can have a situation where you're starting to break down and get a little bit deeper. Gold has broken out clearly by everybody's count, and the main thing to note here is yesterday we told you do not advance your stop to this low point, 1 cent below today's low or yesterday's low, simply because you have broken out of this support, which means oftentimes you pull back and you test that previous resistance to see if you're now finding support there. We are. So again, I would not be advancing the stop too early, and I would look for this to continue to move to the upside over time. And I do see a bigger move here than just a little blip to the upside. I actually think you've got a bigger move here. This is basically what we would call a measured move. You have the first leg to the upside here, then you get this middle move here, the consolidation pattern. I'm looking for another one of these legs out of the top. The Hong Kong Hang Seng Index, this one I've also left alone. I don't like the overall chart pattern. It's basically widening this point here, and then we basically drew it out here to show the perspective that we're getting that widening pattern here. But you could actually draw it out like this and get an idea that you could still move to the upside and still be within that channel. You could even draw it like this off the high. I don't really see this as a sustainable move to the upside. This would also be concerning for me on the situation we're showing you with the head and shoulders pattern. If the overall markets don't have a lot of upside to it in them without starting to stall and fail and pull back, then those head and shoulders patterns start to come into play again. The India Bombay Stock Exchange, or the BSE, this is another one that after we had consolidated for a little bit during this time period right here, I didn't get involved with it once you did close above this point here. Multiple reasons. We didn't get a really strong pullback here. We didn't get a hammer candlestick formation. The breakout would have gave us a pretty nice sized gap there. We'd already made this money here, so I wasn't going to really risk that. And then I didn't see a lot of moves to the upside here simply because we were so overextended from the 50-day moving average. And then today's activity shows there's a lot more weakness in there than we had first seen for the first couple of days. Now we're seeing a lot more selling there. Be watching this probably to find resistance at this upper Bollinger Band point. Looking now at the EWJ, or the Japan iShares, this one we have finally got a hold of. Over here we had this nice advance going on. We took advantage of that, got stopped out immediately after she peaked. And then we saw this little hammer candlestick formation. I was looking for this to actually trade more like gold did. I was actually looking for all the markets to trade more like gold did, just move sideways. That didn't happen here. We marked it, said if the following day gave you a higher high, be a buyer. You didn't get that opportunity. The next time we saw a setup off of a hammer candlestick, we said, okay, we would buy this the next day. She simply gaps down to our stop loss limit, so you were like out. If you try to get in, you were out within seconds, and you were simply lost a couple pennies there. Then we tried to go here and said the same thing, and then she did the exact same thing, gapped actually below our stop, so you never would have entered that one as well. Then we get down here trading below the 50-day moving average. We put that note on the chart there. They were kept on our website. If you guys, if we didn't cover it in video, it was there for you guys to see it when it happened. Once you're trading down there below, that's where you start looking for really quality opportunities, and then you get the hammer formation. Told you if the next day give you higher, which it did, you would be a buyer. Stop set off the low. That happened there, and now we're just starting to trend a little bit higher. A couple of things you should note about these uptrend moves like this. Whenever you start to move to the upside, it's quite common to start to see this kind of activity, like a little sell day here. Or here, the early stages of this reversal, you start to see this little threatening, what you could call dark cloud cover days, that kind of thing. Don't worry about those. You're going to see those a lot, and people oftentimes are like, oh, it's piercing or it's dark cloud cover, whatever. If it's in an early start of an advance, it's not to be as concerning as if it already advanced itself pretty far. A lot of times it's just a shakeout, and the following day you start to advance again to the upside. The London Financial Times Index, or the FTSE, is the one where I saw the most strength in Europe over the past week, and this is the one that we were marking on the charts and kept on our free website telling you this is the one I would be a buyer of. You pull back down to the 50-day moving average, you put the note on the chart when that happened. Then you started getting hammer formations, and you also had a bullish engulfing candlestick formation, so if you blended them together, you still had a really nice hammer as well. Hammer followed the next day, a stronger hammer the day after when we marked this. If you got a higher high the next day, I'd be buying. You got that the following day, and you broke out of this downtrend line. Everything that you wanted to see happened. This chart was absolutely perfect. The following day, you get a nice move to the upside. I've simply taken the stop and cleaned this up and advanced it to 1 cent below today's low. I don't even have to be that way about it. I could just give it more room to run there, but I'm going to just keep locking in gains and eliminating risk in my trades right now. So right now what I've done is advance the stop so that we have almost no risk on the table whatsoever. And if you were involved anytime during this period here, touching off of the 50-day moving averages, then you actually have a small gain already on the table. I do anticipate this will test the previous high, and I would expect a breakout. Why would I expect a breakout? Because you do not have a shooting star signal here or here or here. That tells me that there's no major resistance up there at that level. There's no major sell pressure. That means that we can actually easily hit it and break right through it. We said the same thing back during this time period when we're talking about looking for this to be tested. She broke right through it, no problem, pulled back. Now we're going to do the exact same thing. The NASDAQ is being naughty and not in a good way. I don't like it. I don't like it at all. I don't like it so much that I simply take my stop loss limit that was here and advanced it to here, 1 cent below today's low. If we actually get stopped out, I don't really care. I would like to make sure that you, in this case, you're either going to have a very small gain or a very small loss if you get stopped out at this point. This is concerning to me. It is, again, another one of those head and shoulders formations that we talked about. It actually is not a head and shoulders formation until it's confirmed by actually closing below the neckline. Once that happens, you would simply do the math again. Like I said, you take the highest point of the head and down to the neckline and do the math and say, okay, that's how far we expect to fall when we break down below that. This is something that I'll keep an eye on. Again, it's not happened just yet. We could break out, lots of different things here, but I didn't like the fact that all week long we barely climbed. It was a very weak situation. We're seeing a lot of weakness this week. I don't like that, so simply protect yourself. The XOI oil and gas index, or the oil index here, you can see that you've got a nice little situation. It looks a lot like this. You see this little shooting star? You see this over here? This isn't actually a shooting star. This is an inverted hammer. Basically, it's upside down hammer. It's basically the exact same thing. The difference being that where they form in the overall chart formation. If you have them form after a nice rally, then they're a sell signal. If they form after a nice sell-off, then they're a reversal signal telling you, like I saw over here, look for a move to the upside. So this is still how I'm viewing this as being a bounce to the upside. Look for a test of the previous high. Here you may find resistance because you did get that shooting star off the top showing there was sell pressure there. If that pressure is still there, you will not break out. So that's important to note as well. One more item I'd like to note regarding this actual candlestick formation. You're going to see a couple of these today. Notice that you've got this selling pressure. It looks like it's a red candlestick formation, meaning that the close is actually lower than the open for the day. And it would look very bearish or a selling kind of situation, but it's actually not. It's too early in the pattern. It's like you had over here, breakout, sell day, looks like, oh, a dark cloud cover is horrible, and then boom, took off. The same thing is what I'm expecting here. It doesn't always happen that way, but a lot of times you get that early sell signal and it doesn't mean anything, it's just a shakeout. Looking now at the UUP, or the US Bullish Dollar Index Fund, this one we actually have a small gain on the table. You could advance your stop if you'd like to. The way she's been moving around and whatnot, I don't want to get stopped out too early on this, so I'm going to go ahead and just let it sit there for a while. I may regret that later, just keep that in mind. I prefer to, if I'm going to go short, I prefer to see a situation, let me get out the tools here, where we've come up there to an overbought condition, and then once the ultimate oscillator pulls it back down below the 50 line, then I feel like, okay, it justifies me advancing the stop loss limit there. If we haven't done that, which we haven't here, we're starting to find some little support there out in the 50, then I want to wait so I don't get just stopped out from just some little wiggling price activity for no reason before she makes a bigger move lower. Looking now at the Russell 2000 Small Cap Index, basic, same overall story. Very bullish chart though. You've got a previous situation here we talked about when it was forming. This is a cup and handle situation here, telling you look for a big move once you broke out above this little resistance line that we noted on the chart on the website there. You had the breakout, you had your buy opportunity there the following day as well. She takes off the upside, we advance the stop, we eventually get stopped out, then she consolidates and just pulls back here to previous resistance, which is now going to be acting as support, and it's also in line with the 50-day moving average, so forth and so on. This is actually a great chart. I like it a lot. I have advanced the stop. The stop was here, and now I have advanced it up to here. It's just being really cautious on this market right now. However, I want to point out that this is a very strong bullish condition here. You have closed above the downtrend line that was previously acting as resistance, and to this little activity that you have here isn't a sell signal, it's a buy signal telling you to look for reversal to the upside from this low downtrend situation. Also, even though it's the close of the day was actually less than the open, it's another one of those, oh no, it's a dark cloud cover. No, it's too early for that to be. It's just a fake out, I believe, and you're going to continue to move higher and test this previous high. The SPX, or the S&P 500 Large Cap Index, we've advanced the stop to 1 cent below today's low, and that's actually locking in a little bit of a gain for us here on this little trade. Again, this wasn't something we expect to make a ton of money on because the pullback was, again, shallow, and that doesn't give us a lot of opportunity there. If you were just trading for the previous high, test the previous high, you were probably exited today, coming close to the upper Bollinger Band line. This can do different things. You may see a couple different things happen next week. You can either see a reversal immediately happening, start to move higher and break out, or we may simply move sideways within this channel. We have some little consolidation going on. That's also quite common. And in that situation, I wouldn't mind being stopped out, and now I then would start to look for actually breaking out a close above this upper resistance line as being your next buy signal. Silver broke out and then pulled back into the channel. This is actually a bit weaker than we saw with gold. We've been talking about that from the beginning of the breakout. It's always been weaker than gold. However, it's still basically trading the exact same way. So I would just continue to be bullish on this. And we're looking for a stronger move outside of this channel here. Whenever you get that, again, that's probably your last time that you're going to be down in this channel until we actually start breaking down. So the very next breakout there would probably be a really good quality buy opportunity for you guys with a tight stop set on that off the low point. Like if you were to have one tomorrow or Monday, you started to break out there, keep a stop right here, and we'll actually talk about that then. If it actually happens that fast, we'll bring it to your attention. The Toronto Stock Exchange, or the TSX, this one we also did not trade at this particular time around. We had reasons for not doing it, but we didn't like how she looked. She looked really weak. We got the shooting star situation here because she gapped up to the previous high and gave us a sell signal, and then she came around, gave us a little hammer, and then a little dark cloud cover, and then the following day she shoots off to the upside, dark cloud cover again today. You've just got a bunch of mixed signals, all of it basically telling you this is not a strong advance to the upside. You may come up here and fail, you may come up here and break out. Right now it's just not strong enough to get me interested. I like to see good quality hammer candlestick formations and strong response thereafter. In this case here, we're just not getting that. The volatility index, or the VIX, which runs the inverse of the S&P 500. If the S&P 500 is bullish, you expect the VIX to be bearish, expecting it to be selling off or in a downtrend, while the S&P is doing the exact opposite, rallying or being in an uptrend. This is actually still very weak to me. I don't like it in any way, shape, or form. We talked about this hammer candlestick formation telling you at that particular time it's not a good sign. You want to see a hammer form after you've had a major sell-off. That would tell you one thing. If it forms after you've had a rally, it tells you something else, the exact opposite. It says it's a hanging man candlestick and a sell signal. We told you we were buying the S&P rather than shorting the VIX, but for those of you who may have actually shorted the VIX, I'm sure that some of you guys did, congratulations, you've made money. Advance your stop, lock in some gain. This doesn't seem like a bottom to me. However, the VIX doesn't run to zero and then back up to there are certain levels where people typically trade the VIX, and they professionals. So whenever you see the VIX pulling back down to the 13 level and then bouncing off it and then pulling back down to the 13 level, this is your oversold zone right now. This is your overbought level as well. So look at it that way, as opposed to saying, well, she can keep going lower. Well, yes, she can, but right now there's obviously a floor, a zone area that they're calling oversold when they've actually say, okay, we're going to take off our risk protection, or we're going to add to it. It's clearly defined as being a zone, as opposed to just, oh, it's going to fall and keep falling as long as the market keeps rallying. It doesn't really work quite like that. The Wilshire 4500, this one is another one we talked about last week. It's being in very bullish condition. We liked it a lot simply because you had this previous setup. That's always very important to me. And you'll notice in this particular scenario, you had the cup with handle formation going on for a while. Then you had this nice little channel develop here and a nice breakout. We talked about this back when it was happening on the what was it, the Russell 2000 small cap index. Then you had a nice rally off of that point, and then a nice little pullback, just basically testing previous resistance, now acting as support. Once you have that situation going on, you look for it to bounce, and that's what we did. You can bounce, move to the upside, closes above the downtrend line, confirming that. And now we're getting this little bit of weakness here. Again, this is just another one of those situations that actually is a hidden good sign. Look at the days to the upside. 1 here, 2, 3, 4. You can only do so many before you get overextended and you start saying, oh shoot, man, we're going to have a day to the downside where we close lower than we did than we opened. How that day develops is really important to you. If all of a sudden you have a massive sell-off and bearish engulfing, that would be a bad thing, right? If you have a little bit of advance here and then you get a little weakness, that's fine. I don't mind that, because then you start to follow the continue to move the upside. A little weakness, I don't mind that. Start big move to the upside. Bigger weakness, that starts to concern me, especially if you're overextended from a support line, you're further advanced from the 50-day moving average. In this case right now, I'm not concerned with this. I have advanced the stop, though, to 1 cent below today's low. That's probably too tight, in all honesty. If you do that, you're likely to get stopped out if the market gives you any kind of weakness early next week. I don't really care. At this point, I'm just protecting myself in this market because there's just too many weak signs out there. There are some good, strong charts, like I'm showing you here, but there's just a lot of other signs that I'm really concerned with, and so when I've got that mixed bag, I just protect myself. That's just the bottom rule. Alright, for the last week or so, I've been on occasion, I'll toss out a stock that I'd like you to have a look at least add to your watch list for the next day or the next session or the next few days or whatever. I'd like to bring your attention to PBI for next week, Pitney Bowes, and what we're looking at here is a stock that's been in a massive downtrend here for a while. Then start just trying to reverse it here, but this little trend here is just previous to the massive sell-off. It's not really actually a reversal, it's just a bounce. Then you get another one down here making a lower low, so you're still in the downtrend, and you get a move here, and then you get another pullback here. Possible reversal happens here because you had a series of higher low points here, but we're still not seeing higher highs. Then you get a higher high. Okay, now all of a sudden you've got an actual reversal situation turning a downtrend into an uptrend. What you want to do there is say, give me a pullback that I can use and continue to hold that uptrend. So we get a pullback here, substantial number of down days in a row, pulls back to the 50-day moving average, giving us hammer candlestick formation after hammer candlestick formation. Like it. I like it a lot. This is something I would definitely be watching next week, assuming the market continues to go to the upside, and I'd like to see strength increase in the market. If we start to see that for sure, this guy's going to test a previous high. Also, if you look at this picture, and we clean this up a little bit for you, and we pull that out again, we go like this, we draw ourselves up a little picture here. You tell me what that is, and I'll tell you what I do with it. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. And if you don't come visit, then I won't think you like me, and then you're off my Christmas list, and you don't want to do that. God bless, take care, enjoy your weekend, and be safe. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.